Hello, I thought today presented a good example of a market situation that made it particularly difficult to enter the trade using the normal 1, 2, 3 or hook patterns, because the normally I would enter on the open or close of a price bar that is closest to the 8 EMA line, but in this case the closes were occurring up near the upper Bollinger Band, where we normally wouldn't want to enter the trade. So the goal is the same. We want to enter the trade as close or as on top of the 8 EMA line as possible. But how to do that and accurately and anticipate where that entry point is going to be is what I'll show here. And I've got the market replay set up just a couple seconds prior to the 6:30 opening here in California. That's a 6:30 opening of the U.S. market, and I've got the normal bracket trade target and stop loss order set to 5 points because we're in higher volatility markets. So 5 points has been working out well. So let's go ahead and start that up here, the market replay program. You always want to, at these openings, you want to be careful to not be suckered into trading these opening moves, because often they're very deceptive, and traders themselves don't know which direction they want to take it yet. And so you want to try to wait for that, for it to at least make a few bars to get established, to decide where it wants to trend, or if there's going to be a crossover or a fractal made. So we'll just wait for these opening moves to start trying to establish a trend or a fractal. See, that could have been a good short trade right there, but you just never know on that first bar. So it's always good policy to let those first bars pass. Just let it tell you what it wants to do first, and never try to guess or speculate, because you don't want to be a speculator. You just want to follow what the market is signaling is trying to do here. And because I've already watched this morning, I know what it's going to do, but this is just to show the technique of entering this trade. And right now I would have said, okay, it's crossing over to the upside, so it's trying to establish an uptrend, but I'm not sure yet until that fractal starts to form, which is the 1, 2, 3 formation, or it's forming a 1 point, number 2 point, then a number 3 point is what we normally look for. And see, I would not want to enter the market up here, because we've got a flat Bollinger Band range, and we're towards the top of the Bollinger Band. So I don't want to enter the market here, and I see where the temptation is to do that sometimes. But I think you'll see in a moment here it's going to start to reverse and come back down to the 8 EMA. So the best policy is trying to enter that 8 EMA line as close as possible. Now if we're to project it where it is at the next price bar, I'd say it's going to be right about here would be a good place to go long on the next price bar opening. See, if you project it up to where it's probably going to be, it's right about there. And so this is one way to enter the market. Now I'm not entering on momentum, I'm entering the trade on reversal, but I'm relying on the 8 EMA angling outward And so let's see if that gets me into the trade there. So I'm actually in a long position very accurately to that, where that 8 EMA line is. So in this case, I'm not depending on momentum to get me into that trade. So that would be it probably wouldn't work out to $140, the first trade, but this market replay program isn't completely accurate to the way it works. But we'll try that again. Using that same technique of projecting where that line is going. These will work out usually in the first trades of a trend, because we see we're in that upward phase of that. If you picture this as being a sine wave, we're in the upward cycle, and we don't have to worry about being on the wrong side of the trade until it starts to turn downward in a lower cycle. So we're right after the crossover in that initial opening phase, where it's opening outward from the 14 SMA line like a alligator mouth opening. That's usually a good time to enter a trend. So, or to enter on the 8 EMA line, because you know that the odds of a reversal are not likely. So let's cancel out of that one and try to enter the 8 EMA line a little bit higher up. And let's try a trailing stop loss trade here. Usually the initial trades, I'll keep the target just to establish the initial profit, but then we'll just let it see if it rides upward in a trend. So I'm taking the initial risk here of 5 points, but as soon as I can get out of risk, I'm going to try to move this stop loss up to lock in a little bit of profit. Matter of fact, if I don't want to be in too much risk, I can just move it up right now below natural support, which is below each price bar here. And since we're moving up in a pretty strong trend here, I know it's a good possibility that I don't need to be at risk at all anymore. So I've just moved it beyond the this dashed line here is the average, or the entry line is the average position line, and so I moved it into the profit zone. So if it were to come back against me and take me out at this stop loss, it'll be a small profit, and there's really, at this point, I'm in a risk-free trade. That's the beauty of a trailing stop loss type trade. In fact, I can move it up below the low of this bar because there's just so much distance between the open and the current tick. And see how quickly, see how lucrative that is. At this point, you really don't have to think about it. It's almost a no-brainer mechanical process. So typically what I'll do is I'll trail one bar, at least a point or a tick below the low of the previous bar in an uptrend, and we would just reverse this in a downtrend, so above the high of the previous bar in a downtrend. So as another bar forms, I'll move this trailing stop loss up one tick to a point below the low of the previous bar. And so what that'll do is, when I get stopped out, it'll stop me out at the point where I'd want to look for the next P3 point. anyway. So here we go. We've got at the next price bar opening, I moved my stop loss up, and that's all the trailing stop loss process is. Usually you'll get these initial trends at the opening of the market. Later on in the day, it makes more sense to use a target type trade. Just keep your targets. As you can see how easy it was to cancel out of that target, the initial target for the bracket order. I just clicked on the X here, and that got me out of that order. Canceled out the order. But it can be surprisingly generous if you just let it ride like this. It's very difficult often to enter the trade, but if you enter, see how the projection was accurate? It was right at this the 80 EMA line, which we projected at the time. But as you can see, as it moves up, it pulls that 80 EMA line right at the intersection of the price bar and the line. So we entered at the perfect point right there, and that was by use of by using the entering on a stop or a limit order, simply by pressing the left clicking on the mouse for a buy. If you watch the order line here, see how when it's below the current market price, it's a buy one at the limit. If I were to move it up, it's a buy one at the stop order. So it changes from limit to stop order depending on what side of the market you place the order. For a limit order, it has to come down against the direction you're trading to enter you. And for a stop order, you're normally trying to enter on a stop because you're trying to take advantage of the momentum. Sometimes this auto scroll on this chart makes it difficult to it keeps trying to move the chart around as you're trying to move the stop order. And you can stop that if you wanted to. You can stop the auto scroll by double clicking on the side here. You can also change the scale, by using the holding down the shift button and using the scroll wheel on the mouse. And so you can change the scale to what you want it here. If you did it over here, you can change the width the price bars are from each other. Also by holding what I'm doing here is I've got the cursor off the scale side and I'm holding down the shift button using the mouse wheel, and I can change the distance the price bars are apart. If I want to change up and down, or I can hold down the shift button and use the scroll wheel to change the scale I'm looking at. If I just want to move it up and down, I can use the scroll wheel just without having the finger on the shift button. I didn't want that to sound wrong. And so I'll move it up below the low of the previous bar. If you want to return it to normal, just double click it again and that'll take it back into auto scale. Another area where you can actually do a trailing stop loss order is on the 5-minute chart. As you can see, if I pull it out, we've got trade mode on the 5-minute chart as well. I just had it covered because I have it pushed back so far. But you can also use a trailing stop technique on the 5-minute chart bar, and you'll get a longer trend out of it because it's much smoother on the 5-minute chart before there's a retracement. So this is just a matter of subjective evaluation on where you should put that trailing stop loss. I like to put it, one tick below the low of the, or 1 point below the low of the previous bar, and you can vary that if you want. You could put it right at the ADMA line because it has a tendency to bounce. Or you could put it at the last, what looks to be the last P3 point, even though this really isn't an official P3 point. But it just depends on how much risk you're willing to take, and if you think that trend is just going to keep moving up, no reason to get stopped out and have to re-enter the market. So it's a judgment call on how far back you want to keep that trailing stop loss order. For here, I could just keep it right at the ADMA line. See how in very little time, at all here, we're already up to $750, and that's pretty accurate because we've only made 2 trades so far, so we're not taking out much in commissions. But you never can tell how much the market's going to give you, It can be very generous. So you kind of get the general idea here. When it's difficult to enter on a normal, see how these are all rising lows, each price bar, and there's no real P3 point formed, so it's very difficult to get in the trade as close once in progress because it's trending so steeply. It becomes more and more difficult to get in at the normal points where we would try to get in an opening bar that's close to the ADME line. But once you're in a trailing stop loss trade, you don't care about all that. It's just a matter of mechanically moving it up, so it solves a lot of that dilemma. If you're trying to enter get in the habit of trying to enter a trailing stop loss trade as often as possible, you'll often catch these types of moves, especially the ones that are happening now in the current volatile market. Let's just see how long I can stay with this trend here. Yeah, I'll just move it out of the way in case it has a retracement here. Like I said, that's a judgment call because you don't know if that's a reversal or not. And looking at the 5-minute chart, we see a close outside the Bollinger Band here, and then a pullback, and so often that's just a reversal. It'll come back down, to try to hit the Bollinger Band if you look at the 5-minute chart, One of the things I use to know if it's reversing on the 5-minute chart is if, let's say, the next price bar falls below the low of this price bar here, and it's been hugging the upper Bollinger Band like that. That's usually a good sign. That would be a retracement on the 5-minute chart, but it's usually a good sign of to take the trend change on the 1-minute chart. Otherwise, you just generally want to stick with the trend that's occurring on the 5-minute chart and forget about any counter trend trades on the 1-minute chart if the 5-minute chart is as strongly trending as it is here. So don't try to take those counter trend trades on the 1-minute chart with such a strong 5-minute trend, because odds are it's going to be a fake out on the 1-minute chart. So the best policy is always try to trade with that trend, and you're generally going to do pretty good. See here I could have been stopped out, but I would just have to re-enter the market here anyway. So let's just keep that trailing stop loss going. At the next one, I'll let it be stopped out. You can see how if we use the same trailing stop loss technique on the 5-minute chart, we're at no risk at all of getting stopped out, because these lows are so far apart. So the trailing stop loss on the 5-minute chart would be right here below the low of this previous bar on the 5-minute chart here, if you can look where my cursor is. So that's your choice. You can, if you're really feeling like you want to get a long-term trade here, you can trail on this 5-minute chart, but more often than not, I usually trail on the 1-minute chart, and that works out pretty well. If you look at the time here, the market opened at 6:30 in the morning on this recording, and so we're only looking at 20 minutes into it. And just because we're using a trailing stop loss type trade, look at the profit zone here. That's pretty amazing. In the first 30 minutes on one contract. If I simply want to trade more contracts, I would hit that button, and so now we're trading 10 contracts at a time, but of course you want to have the account size that would support that. But so we're just simulating one contract trading here, because it's the same principle if you have more contracts. The only difference might be the rate at which each contract was filled. There might be a little bit of a delay between contracts if you use large contract lots, but usually that's not a problem, because these markets are electronic, and we've got, if you look down here on the left hand side in the 5-minute chart, look at the volume we're dealing with. We're dealing with pretty good volume. And so that's a lot of contracts is changing hands. So up here would be 16,000. So that means good liquidity, the higher the volume is. If you were trading the S&P 500, you'd get even much higher volume. And so that assures that when you're trading in large contract lots, there's going to be, for every buyer there's a seller, and you're probably going to get your trade filled and executed fairly quickly. So that's all a function of liquidity and volume. So not even 30 minutes in the trade, and look at what this trend is already producing just by using this technique, the trailing stop loss technique. And all we did is just drop the target on the bracket trade. And you might say, well, why even trade with targets at all? And that's because you never know if it's going to trend or if it's going to be a short oscillating type of trading range type market. So it's just handy to have those targets set, and then you can adjust it later for what the market's actually starting to do. So in this case, if it's a strong trend, no need to use a target, just let it be a trailing stop loss type trade. If it was a trading range, I would tend to keep the targets or limit orders, as they're called in a bracket trade. So it's just the same process. You can see once you're in a trailing stop loss trade, it's just so easy that anybody can do it. It's just all I'm doing now is moving up that stop loss to lock in the profit from the distance from the entry line. They call this the average position line because, which is a good name for it, because if I were to, let's say, enter another contract up here, what I'd be doing then is pyramiding. That's a process called pyramiding, and it would change my average position line. So basically, this line acts as the break-even line, where you would break even if the trade came back against you. So let's see if we can get stopped out here. That's a good sign of a trend reversal, by the way. If you get these bars very close to the Bollinger Band, and then you get a pullback through the low of the previous bar in an uptrend, or low of the high of a previous bar in a downtrend, and there's some distance from the ADMA line, that's a good indication of a possible trend reversal. But on days like today, when the trend is so strong, you don't want to trust that you don't want to take any trend reversal trades. You just want to, there's no reason to. You just want to stay with the bias of the trend. If the trend is so strong, don't even mess with if it looks like it's going to trend reverse. It's really got to be convincing me that it's actually making a trend reversal, and I've got to see it. I've got to see it on the 5-minute chart as well. So I just exited the trade there as it broke below the low. I didn't wait for that stop loss to get hit, and so this is probably a good point to end the video. But I just want to see how far that trend would take me before stopping me out. And you can see it's probably a good point to get out here, because we've got to close outside the upper Bollinger Band on the 5-minute chart, and it looks like it's going to do a little bit of retracement down here, which would translate to a little bit of a trend reversal on the 1-minute chart, or sideways movement. So yeah, that's a good point to get out of that up move and just take the profit, what you've done so far. And so that's pretty good for even the day, unless you want to just jump right back into it. But so I'll leave the video right there just to show those couple of principles there.